Now, many investors, they are thinking that the share price move up and down is only because of the company performance, such as earning. But there are some other factors that is also going to affect the stock market sentiment and ultimately influence on the share price as well. For example, economy. Now, how economy is going to impact on the stock market? Macroeconomy factors such as interest rate, inflation, unemployment rate, and the economic growth (GDP) often move the stock market sentiment. Stock markets are always routine for more economic growth because it usually means more profit to the company, and more profit tend to grow the value of the stock. Now, let me give you an example. Decline in the interest rate often send a market signal that the market is going to go higher, because since this is a sign of economic growth. On the other side, high inflation rate also sending a message to the investor the interest rate is going to get higher and ultimately is going to slow down on the economic growth. The rising of the unemployment rate, which means that is lower on the economic growth, but decline on the unemployment rate, which is giving a signal to the investor the growth of the economy is on the way. Now, all this data into the report is very important, and this is ultimately is going to move the overall economy sentiment. Number 2, politics. Politics always have a sensitive and potential to impact the stock market, because the politic actions such as regulations and law have an impact on the economy and also ultimately can drive the overall market sentiment. Now, all the news that announced by the government on the new regulations is somehow matters to the stock market as well. Now, let me give you an example. Now, Biden is the one that is more focusing on the green energy, and that is giving a signal to the investor green energy will be the next trend of the counter. The previous US President Donald Trump, he is more focusing on the traditional energy, and because his campaign platform favored on the traditional energy over alternative energy such as solar power, that is also giving a signal to the investor on traditional oil and gas company. Number 3, natural and man-made disaster. Now, natural disasters including earthquake, volcano, bad weather. Now, all this is going to impact on the economy as well. Now, if the country is very much GDP is coming from agriculture, if all this natural disaster is going to make the country to have a very low harvest result, and that is ultimately going to impact on the commodity price. Now, man-made disasters such as war will make the oil price getting very much downward pressure, and with this downward pressure is going to impact overall oil price. At the same time, also is going to influence on the stock price relevant to oil and gas. Last but not least, market psychology. Now, at the end of the day, the stock market are caused by all the human beings. All the human is going into the market to do the investment. They are the booming period in the rising market when everyone want to buy. Alternatively, they are also a period of panic when almost every investor want to sell. At the end of the day, market psychology is driven by news, and all this news is ultimately going to influence on the investor emotions. Now, I hope this video is going to help you to further understand on what is the factor that is going to impact overall stock market, not only from the performance of the company. And I hope I can see you on the next video. Thank you.